The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. Let's make some money. Let's see, we're going to talk a little bit about the euro and the dollar, and that will explain some of what's going on, and you'll get a better understanding of how I feel about cryptocurrencies. It's one world, and all these moving pieces work together. Okay. What we have here is a chart going back to 1972. We have the euro dollar at the top, and we have the dollar versus the Swiss franc at the bottom. I want to do something right off the bat here. We'll put a trend line here on the dollar, kind of create the "you are here" map like you see in the subway or the train station, let you know where you are within the system. This is your "you are here" map. You want to start there. Never lose this perspective. Okay. This yellow line represents the low in the dollar in 2011. We see clearly here the euro and the dollar, although they trade opposite one another, they're not exactly synchronized. The euro started to fall as early as, get rid of this. Watchers of my video know I haven't committed to a software package, and I'm using various packages until before deciding to recommit the trading view. Let's see. In 2008, the euro peaked. Also, what peaked around this time was oil. So euro and oil both started to decline ahead of the dollar reaching its bottom. But when the dollar bottom at 2011 corresponds with the peak in gold. So we have the classic relationship with the dollar on one end of the seesaw, and the Swiss franc, the euro, gold, oil, basically energy and metals, euro and the Swiss franc on the other end. So I'm Dollar Will because I trade dollar-centric things or dollar-sensitive items. So we see here in 2011, the euro started to fall. Saw something interesting here. Even if we just measure from the point where the euro and the dollar were correlated, you will see a 50% retrace. Comes right up to the 50% line on the retrace. Where I'm going with this is the euro started to rise. At the bottom of the screen, you see December of 2016. So we're talking about what's that? About 15 months. About 15 months. Yeah, 16 months of the euro rising, and that was even if we just ignore this part, that would be an A, B, C wave for the euro. Now, let me ignore the dollar for a second and look at this just in terms of the euro itself. Now, all of this is A wave. I'm I am an adherent to Elliott wave theory, and retraces are ABC patterns. All of this is A. And we have a neat retrace to the 61, that golden mean number, 61%, right there. So we got A wave, B wave, C wave. Now, look at here, we got 1, 2, 3, 4, 5. In order to break this trend, we must make a new low. We go lower, we make the new low. The dollar has a significant way to go higher. That's my view. I'm sticking with it. See how it goes. Let's see what else we got here. Just a tighter view of euro, showing you the same thing. A, B, C. Okay. Let's see what we got here. Oh, I also wanted to show you on this chart. This is all the same thing, different. I'm using this is bar chart. Everyone knows I go back and forth between Trading View, bar chart, freestockcharts.com. On the stochastic for the euro monthly chart, we are overbought. We see a reading of 90. Anything above 80 is overbought. Not only are we overbought, the fast line, the black line, looking on the data box in the upper left, the black line, the fast line, that's the top reading, is lower. So we've already crossed over. A crossover on the monthly chart, that's pretty serious. And we've met we've retraced to a Fibonacci level. That's also nothing to ignore. We're going lower. The euro is going lower. The euro going lower and the dollar rising. That's bad for the stock market. I expect to see the S&P and Dow in that congestion that it's in right now and clearly resume a downturn. I'm studying the NASDAQ chart, and you'll see, I'll be posting videos about that. It looks like I'm seeing a wedge there. I expect the NASDAQ to give up the ghost. I'm looking at the FANG charts, the Facebook, Amazon, Netflix, and Google. Amazon in particular. So stand by for more information about those items. Let me see. What else do we have here? This is the dollar since 2011. We looked at it on the big chart, and I'm going to zoom in, show you. Now this is that. Beginning of, get rid of that. The beginning of that December of 2016. I'm looking at the bottom here. It's telling me the date. That December of 2016 started the downtrend in the dollar. You got your A, B, C pattern. We broke out. We're clearly trending higher. Here we are. Weakness in gold, weakness in energy. The Dow Jones, by its nature, has a lot of industrials, strong dollar, weaker energy and metals. That's pretty much all I got. If you like what you saw, hit the like button, comment, subscribe, hit my PayPal button. Contribute to the beer fund. I'm Dollar Will. Later.